Hey everybody, is the market crash about to happen? I'm going to keep it very simple so anyone can understand this video, experts and beginners. I'm going to show you some news and I'm going to show you the chart on what I'm seeing doesn't look that great. You can dispute it if you want to, but it's getting very, very close for a correction, a downtrend, or possibly a market crash. I'm going to show you exactly in detail why I think so. Here we go. All right, first things first. We're talking about Fed interest rate cuts. It may not happen in December. They're not sure. It's a possibility it will happen, but every day that goes by, there's a high chance that no interest rate may happen in December. The percentage chance is getting lower and lower. Doesn't mean it's not going to happen, but I'm saying that the chance of a December cut is not for sure. November 14th, U.S. agencies on Friday began announcing plans for releasing economic data delayed by the government shutdown. A trio of U.S. central bankers reiterated their concerns about inflation, while the Fed's most dovish policymakers said economic data in hand argued for another rate cut. So we don't know. It's 50-50 chance, possibly, but I'm just saying there was a higher chance before that there were going to be a rate cut. I think at one point it was like a 90% chance of a December rate cut. Now it's only 60%. They're worried about inflation, and some are saying, I do not think further cuts in interest rates will do much to patch over any cracks in the labor market. And then there's the data reports. I went over this a little bit before, but I'm going to go over it again real quickly. I'm going to state my opinion. The government shutdown delayed data reports. The shutdown paused the work of agencies responsible for compiling reports. Once an agency reopens, it faces a rush to get reports out. But some data, especially from a later month like October, may not be recreatable and could be lost forever. And here we go. It says markets may become unsettled due to the lack of update of economic information, making it difficult for investors to gauge the health of the economy. How can you trade the stock market if you don't know how the economy is doing? You can buy AI and tech, sure, but that's more so for the future. People investing into AI and tech because it's going to be huge later on, but what's going on now? We don't know. Can't see the data reports. Policymakers like the Federal Reserve relied on economic data for decisions like setting interest rates. If you don't have data, how do you set interest rates? Delayed reports can complicate these type of decisions. And then we have an example. September jobs report delayed by the shutdown, but it's ready to be released. I think it's going to be released this week or next week. September jobs report. October inflation and jobs report. The October jobs report was likely lost forever. Consumer spending and GDP reports. Those are overdue, but we don't have them. So based on those two things I said so far, there's a possibility that interest rates may not cut in December. And then you have the delayed data reports. As far as the cuts, you have to remember, the stock market prices in things before it happens. So there's a big possibility that the interest rate cuts for December were already priced in. Now, when you take those December rate cuts out of the picture, guess what happens? You're going to have a sell-off because the rate cuts were already priced in. Now, the delayed data reports. Now, if the data reports look bad, that's one thing. But the other thing is this. If the data reports look bad, it's a possibility that the next data report and the one after that is going to be bad or even worse. And we can't even see what's going on. We don't know. That's the issue. If we knew or had an idea of the numbers, that's one thing. But we don't have an idea at all. That's not good. It's like it's hidden. We don't know. So people are taking risk off the table. It's selling a little bit. And the last thing that I want to share with you that's also affecting the market is the NVIDIA earnings. So last time NVIDIA had earnings, I think it was in August. The week of the NVIDIA earnings, NVIDIA did pretty well. It was going up all the way up until the earnings date. But this time is a little bit different so far. Monday, don't look too good. Tomorrow, probably not as well, but we'll see. Previous NVIDIA earnings, it went up all the way to the earnings, right? But then it had a decent sell-off a few days after that. This time, we're having selling before the earnings. Now, if we have selling before the earnings this time, and then a sell-off after earnings, things could start looking ugly for NVIDIA and some AI tech stocks. NVIDIA numbers should do pretty well, but this is the only problem that I see, and also a lot of big investors see as well. But you have to remember this. NVIDIA's primary concern, the China problem. They're losing a lot of money that they could be gaining because of tariffs and blocks in the way of selling the chips to China. The US has imposed restrictions on sale of NVIDIA most advanced AI chips, like the H100 and the newer Blackwell series. Why? Due to national security concerns. This has effectively shut NVIDIA out of a market that previously accounted for a significant portion of its data center sales, 20 to 25% data center revenue previously, or 13% of total company revenue in the fiscal year of 2024. Now, if you run the numbers on that, that's huge. That's a lot of money lost because of the national security concerns. NVIDIA's management has stated that its current revenue outlook and guidance for recent and upcoming quarters, Q3, Q4, fiscal 2026, do not include sales to China. Analysts estimate that NVIDIA AI chip market share in China could drop significantly from 66% in 2024 to 54% in 2025. The CEO of NVIDIA even said that their market share in China went from 95% to 0. So look, things can change. At any time, who knows, the government may open up sales for China or let NVIDIA do some business in China that will increase their revenue and earnings. So that's the major issue in the background, but that could be a temporary thing. So we got to see what's going to happen there. First, I'll look at the NVIDIA chart since we were just talking about NVIDIA, and then I'll look at the broader market, especially the AI tech. So I think the NVIDIA earnings recently was August 27th. So this is what I was saying earlier. We had 1, 2, 3, 4, 5 days of green for NVIDIA leading up to the earnings. And then when the earnings came, it went up, right? But after that, it had a long decline right here, which was, pretty bad. But it did recover after a while and slowly went up again. But now, things are a little bit different. We have had a long decline for NVIDIA since October 30, and now we are in the earnings week. And this is the first candle for earnings for NVIDIA right here. So can things change? Can tomorrow be a green day and a green day after that? We'll see. But the thing is, if NVIDIA goes down too much, say NVIDIA goes down to the mid 170 area, and then it has good earnings, right? Spectacular earnings. Then it'll probably come back up to around, 185, 189. That's not going to be a huge gain really for the share price because it went down so much already, and then it just came up to where it was trading at before the sell-off and before the earnings. Like for example, NVIDIA goes down to 179, and then earnings comes out, it gains $10, it goes to 189. Well, 189 is right around here. So, after earnings, a lot of times stocks don't just keep going up. So if NVIDIA goes to 189 after earnings, and also note that there's a lot of resistance here at the 192. The Bollinger Band and the moving averages is stacking up here, showing high resistance at the 190, 192 area. But say, for example, NVIDIA goes to 189, 190, and then it struggles. And then it's just going to come back to the low 180s to 170 or even further if there's a sell-off in the market. NVIDIA was at the 212 area, and if their earnings are good, spectacular, yeah, it could probably go to 200, right? Something unexpected, something crazy, like I didn't see that coming, right? Then it could go up to maybe 200, 205, something like that. But then you have to remember that the NVIDIA AI tech is kind of overbought to some degree, and that's why they're talking about the AI bubble. Now let's look at the tech and AI stocks. And to do that, we're going to look at SPY ETF. And here we are with 4 weeks in the red. You would think that we'd be going up, right? Because NVIDIA earnings is coming up, but that's not happening because the situations that I named earlier. We have possible no interest rate cut in December. The data reports are missing, and a lot of people are talking about the AI bubble and needs to come down some. Will it be a profit take? Will it be a small downtrend? Will it be a sell-off, or will it be a crash? Those are questions that we need to answer. Now, if we're talking about a profit take, SPY could go down to maybe, the 650 area, right? Right on this moving average. Now, if we're talking about a sell-off, SPY could go down to the lower Bollinger Band, 614. Now, if we're talking about a crash, that's when you're talking about SPY going down to, the high 500s or the low 600s. And if anything worse than that, maybe lower. But I'll be surprised if it goes down too far because you probably will have a lot of people buying the dip. Now I'm going to answer the question why I think there's a high percentage that we start a downtrend. Now this is why. The stock market is kind of based on sentiment, right? And if the sentiment isn't there, people are going to sell shares, especially when the market is up so much. From about 479 to 689. Now if the sentiment is bad, people are going to definitely sell shares and take profit. Now, if the sentiment was good, they may have indecision. Should I sell? Should I buy? Maybe I should hold on, or maybe I should buy some more because the market isn't up too much. Maybe it'll go up some more. But because the market is up so much, there is a higher percent chance that we will see some kind of sell-off. I'm not going to try to guess when the crash is going to happen or a sell-off is going to happen. I can only tell you that it's a higher percent chance now than ever. Now, what should you do? There's a lot of things to do. When the market's going down, you can, if you're an option trader, you can buy puts. There's a strategy for that. If you want to short sell, there's a strategy for that. The reason why I'm saying it's a strategy because you can't just buy puts at any price or sell short at any price unless you doing it for the long term. If you're doing it for a few days or 1 week out for options, puts may not work. You have to time it correctly. If you're selling short, same thing. You have to time it correctly unless you're going for the longevity of a downtrend. And if you don't want to take any action at all, you want to hold and wait it out, best thing to do, hold your shares. And when the market is finished selling off, you buy the dip and you'll make even more money, right? Third option, you can sell your shares at the top and then buy back when it goes down more. That is somewhat hard because there's no way to time the market. You don't know exactly when the market is going to go down. You don't know exactly when it's going to go back up again. You only have an idea of, when it's going to go up and down. You won't be 100% accurate, but those are the three options and you can choose which option you want to do. I'm just here to say that what we're seeing in the market is very unusual from what we have been seeing the past weeks and months. There's some things that do concern me, but here's the thing. First thing first, you want to see the data reports. If data reports are good, we're good to go. We're in the clear. If there's a December rate cut, we're good to go, right? No problem at all. But at the same time, even if the data reports and a December rate cut does happen, I still don't see us just going crazy, pumping up, going to the moon, rocket ship, SPY, $800 per share. I don't see that happening right away, even if the data reports and the cuts happen December. What I think would happen is we'll probably consolidate for a while, right? And we'll probably trade sideways, maybe coming down a little bit, maybe 654 or maybe 640, and then trade sideways and then go up some more. But, at some time, people do have to take profit, but it won't be a sell-off or a crash like that. If the data reports are good, we get good interest rate cuts in December and probably maybe January too. That'd be good too, right? So those are things to look for. Data reports and the interest rate cut happening in December. If everything is good, no problem at all. But if everything is not good, you got to be very careful of what's about to happen next. But remember, if you are in the stock market for a long term, it won't affect you much because a lot of times the stock market will go down and then it'll come back up. So that's why you buy the dip. All right, everybody, thanks for listening. That is my point of view of what I think the stock market may do next. If you enjoyed the video, like, comment, subscribe, and I'll make a lot more videos covering the stock market. If it's going up, if it's going down, if it's going to trade sideways, and also news that affects the stock market. I make videos about all that stuff. So subscribe, like, and comment. See you next time.